Let me guess. You've thought about investing before. But then you told yourself, I don't have enough money for that. I'll start once I'm making more. Here's the truth, that mindset is costing you thousands of dollars. You don't need $10,000. You don't even need $1,000. You can start investing today, with just $100. In this video, I'm going to show you exactly how. Where to put your money, which apps to use, and the biggest mistakes beginners make, so you don't repeat them. Let's get into it. Why starting small actually works. First, let's talk about why $100 is more powerful than you think. Imagine two people. Sarah starts investing $100 a month at age 25. Mike waits and starts the same amount at age 35. By the time they're both 65. Sarah has way more money. Not because she invested more. But because she gave her money more time to grow. This is called compound interest. Your money earns returns. And then those returns start earning returns too. So the real question isn't, how much money do I have right now? It's, how soon can I start? The amount matters less than you think. Starting early matters more than almost anything else. Best platforms for small investors. Okay, so where do you actually put that $100? Let's talk platforms. Option 1, fractional shares. Apps like Fidelity, Charles Schwab, and Robinhood let you buy a piece of a stock. So even if one share of a company costs $500, you can buy just $20 worth of it. Option 2, micro-investing apps. Apps like Acorns or Stash are built for beginners. They round up your everyday purchases and invest the spare change. It's a simple way to start without even thinking about it. Option 3, robo-advisors. Betterment and Wealthfront build a diversified portfolio for you automatically, based on your goals and risk level. You just deposit money, the app handles the rest. For most beginners, I'd recommend starting with a regular brokerage account at Fidelity or Schwab. They have 0 account minimums, and 0 commission fees. Where to actually put your first $100? Now here's the part everyone asks about, where should your money actually go? My answer. Index funds or ETFs. An index fund is basically a big basket of stocks. Instead of betting on one company, you're investing in hundreds of companies at once. Two popular examples are VOO and VTI. These track the overall US stock market. Historically, the stock market has returned about 7 to 10% per year on average, over the long term. Why is this better than picking individual stocks as a beginner? Because one company can crash. But it's much less likely that the entire market crashes and stays down forever. Diversification protects you. One more thing to check, the expense ratio. This is a small fee the fund charges you every year. Look for funds under 0.1%. That's considered very low cost. So, practically speaking, you open your brokerage account. You search for a fund like VOO or VTI. And you invest your first $100 right there. Common beginner mistakes. Now let's talk about mistakes. Because how you invest matters just as much as where. Mistake number 1, trying to time the market. Waiting for the perfect moment to invest usually backfires. Nobody can predict short-term market movements consistently. Not even professionals. Mistake number 2, chasing hype stocks. You've probably seen people online hyping up some random stock promising huge overnight gains. Most of the time, this is pure gambling, not investing. Mistake number 3, not automating your investments. If you rely on remembering to invest manually, you'll eventually stop. Set up automatic weekly or monthly transfers. Even $25 a week adds up over time. Mistake number 4, panicking when the market drops. Markets go up and down. That's normal. Selling out of fear when prices drop is one of the fastest ways to lose money. Avoid these 4 mistakes, and you're already ahead of most beginners. Actionable steps. Alright, let's make this simple. Here's exactly what to do, step by step. Step 1 *, open a brokerage account. Fidelity or Schwab are great beginner-friendly options. Step 2 * transfer your first $100 into the account. Step 3 * buy shares of a low-cost index fund, like VOO or VTI. Step 4 * set up automatic contributions, even if it's just $25 or $50 a week. Step 5 * increase your contributions as your income grows. Got a raise? Increase your investment amount too. That's it. That's the whole system. It's not complicated. It just requires consistency. Here's what I want you to remember. It's not about how much money you start with. It's about starting it all. The person who invests $100 today is already ahead of the person who's still waiting for the right time. So don't wait for more money. Don't wait for the perfect strategy. Open an account. Invest your first $100 this week. If this video helped you, hit subscribe for more finance tips like this. And let me know in the comments, how much are you starting with? See you in the next one. Want to know exactly how to pick your first ETF? Watch this video next.